The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the December 10th, terrific Thursday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. Of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, we're going to go take a look at the gifts of the bulls and the bears, the buyers and the sellers. We'll go figure out what they're communicating to you and I on this wonderful December 10th at about 5 past 1 in the afternoon. And I want you to know that I'm absolutely grateful for your presence here. Now, here's the deal. I'm really here to serve you. So feel free to pick up that phone, dial on in. 877-927-6648. Internationally, 727-445-1044. Of course, you can email me. I'll do my best to get to those emails inside the Tiger's Den. Just go ahead and send me an instant message, and I'll do the best I can to cover whatever it is that you are looking at on this terrific Thursday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we got the Dow trading up 100 points. It's trading out at 17,592. S&P is up 9 points, trading at 2,056. NASDAQ Composite up 28. Russell is up 4.5 points. The DAX closed up just slightly, 6 points. The FTSE closed down 38 points. We've got gold trading off $4 at 10.72. Silver off 7 pennies at 14.10. You've got the U.S. dollar index up 52 pennies, trading at 97.86. Chipotle on fire this afternoon. It's up $27, up about 5%. Brain salad surgery, Intuitive Surgical, that's up $11 and change. Heartland Payment Systems up $11. Lending Tree up $9. Must be good to be a lender. To the downside, not so good if you are in Puma Biotech, off 14%, down $11 and change. First Solar off 10% and about $6. TC Pipelines, that's down about 9% and $4. However, let's try to figure out what the market is doing. You know, I did get a memo, and it said, hey, Steve-O, put on your Santa Claus rally cap out there. Did you get that memo as well? It is that time of the year. And the question is Santa going to deliver coal? No, I don't think so. It's Santa's responsibility to deliver gifts. So let's go see what kind of gifts we can find out there. Now, why does Santa do that? Why does Santa do that? Why does he go ahead and deliver gifts out here when it comes to the stock market? Well, to tell you the truth, if we just simply go back and we take a look at the last 83 years, now this is just taking a look at from, I think, about the beginning of November through the end of December out here. If you're watching this on TigerTV, you're taking a look at a chart of mine. So it's basically the analog, directional analog of the Dow Jones. In this case here, the blue line represents the last 83 years. The little brownish line out there, that actually is taking a look at 2011. 2015, which happens to be a pre-election year, is really tracking along with 2011 quite well, as a matter of fact. But we can go ahead. So I've got this chart out here. It shows you, hey, even in 2011, you know, there was a little bit of a rally that began inside 2011, right around here at this point, which is right around November the 20th is what it looks like. But let's take a look at the 83-year average out here. Oh, I didn't mean to do that. Let me go back here. And that says that, let's kind of track what the market is doing. So right around November 13th, which would be right around this area right here. This is November 13th, all the way to the area of about November the 20th, right here. So in essence, this is, that was November, right? Yeah, I said November. Let's go see what the Dow actually did in November. Let's pull open the Dow chart. We come back to November. That takes us right around here. right around here, which is really the swing point that was tested yesterday inside the Dow. I don't know if it was actually tested today or not. Doesn't matter. Well, 17,483 was the number. The low today, 17,474. So, yeah, it was tested. So we'll go take a look at those volume metrics. We know that yesterday, volume to the downside really accelerated. But as I had mentioned to our caller that was asking about swing points, I said, hey, when it comes to these ETF structures, throw the volume schmolium out there. In fact, I think that there's that commercial, there's that DirecTV commercial that stole the schmolium piece of it. I saw it last night out there. But in any event, and the reason is because it just doesn't work. If you were to hang your hat on the volume metrics inside the ETF structures out here, you'd get crushed. It works on stocks really well, but in the ETFs, it's just not working. But nonetheless, what we know of is that over the course of the last 83 years, the market typically forms, a bit of a Santa Claus bottom down here. It really forms earlier than that. It's really in October. In this case here for us, it was truly the September 29th level. Close enough to October for our line of work out here. So we know that over the course of the last 83 years, on average, we see another bottom right about here. Now, if we put this chart, the 83-year average, back on my screen out here, come on, work, there we go. We're right in basically, in essence, in this place here, right where the market pulls back, as it has for the past few days out here. In fact, if you take a look at just number of days, because we use this really like Jack Sparrow, as guidelines. But this little top out here is December 8th, and this little bottom down here is December 14th. So you've got, about 6 type calendar days out there. And if we take a look at where we're at right now, you had this top out here. I don't know, you could say you had one around December the 2nd. December 1, 2, 3, 4, 5, 6. We're right in that range right now where over the course of the last 83 years, you get that little pullback out here. Remember, we use this as a guideline, so we're going to use other patterns to help us identify. Sometimes works to the day. Always blows my mind when it does, just as like May 21st or May 20th was a 83-year on average when the market makes, the Dow makes a high out there. And, Lord, if it wasn't really right to the day, or maybe the following day. So we know that we're getting very close to a bottom. Okay, at least if we're going to follow along with the memo that each of you got from Santa. I know, and maybe your mail is just a little bit late out there, but trust me, it is in the mail, and Santa is going to arrive, and he is not going to go ahead and deliver coal. In fact, it may be a nice little upside surprise out here. You got to at least anticipate that we get back inside the Dow, probably to the highs out here from November 3rd. You're in about the 17,970 type area, or at 17,593. So that's okay. It's not too bad. Maybe we get higher. I don't know. We'll just take things one moment at a time. So, okay, we have that in front of us. We know what takes place on average. We know what really took place back in 2011 as well. So is 2015 going to be any different? Nah, not really. So let's go figure out now where the message, in my opinion, is likely to come from, and it may have already been delivered to us, is going to come from the Russell 2000. That's really been our weak link, right? So, yeah, and if we take a look at our weak link out here, the IWM, this is what we'll just simply start with. Here's what we know was taking place yesterday. We're dealing with that swing point here from November 16th. Oh, first, let's do this, because there's a green line on my chart, and somebody might say, what the heck is that? And that would be a great question. So let's go back in time out here. Let's read, how do you know where you're going to unless you know where you came from out there? That's why we like to take a look at those analogs. Well, let's take a look at the IWM and understand where we came from. And where we came from was the bottom back in 2009. And so that little green line, or those two green lines that are on my chart out here, nothing more than the rising price channel out here, the house of the rising sun. And what we can see is that price is still in an uptrend. Yes, one way to look at it is say, hey, we're priced at 114.57 inside of the IWM. And you could come all the way back to the time period of December 23rd, 2013, when you can say, hey, for that week, we closed at 115.16. You basically have done nothing with regard to price since December of 2000, 2 years out there. Hey, it's one way to take a look at it. Another way to take a look at it is we've already tested the bottom of that on a weekly basis of that rising price channel. Did it with a nice old hammeroonie, a hammer candle out here. That says that low inside the IWM of 106.99 is muy importante out there. But now let's go to the daily chart. Let's check in on what's going on inside the daily chart for the Russell 2000. And what it did yesterday was really back into this little breakout area. Let's take a look at it. Why do I say it's a breakout area? Well, one, because it's a wide-ranging bar out here. That wide-ranging bar, was begun with this nice little gap up on October 5th. A fairly nice move off of the bottom, little sign of strength back here on October 2nd. And we can see that that level has really acted as an excellent area of support inside of the IWM. That area I'm referring to is about 113.45. Now, yesterday, it was coming down with volume, no question about it. About 42 million shares going after 28 million shares. If you were just simply going to use volume metrics out here, you would have backed up the truck and you would have sold the store. Of course, listening to Stevie, you would have said, nah, we're not going to make that mistake out here. We're going to look for some other patterns. Those other patterns, by the way, I think really coming from the Russell 2000 futures contract, either in the 5-hour chart out here or in the 2-hour chart. Now, this is kind of the cool thing. When the Russell 2000 on the 5-hour chart made its high out here, back on the about 9 o'clock in the morning. That was on November 30th. It was cruising higher and doing it with less relative strength. What you and I know is when any market does that, you got to be careful. And we have to look out for the signals. What are those signals? They're nothing more or less than just simply Japanese candlestick charting. Cold pie to that out here. And we got that nice little bearish engulfing candle. Now, what we have seen to the downside is a move to that seventh wave, that little seventh inning stretch out here. Now, it was done with a wide-ranging bar, and markets typically don't end on wide-ranging bar, and this market here has not ended on a wide-ranging bar. That wide-ranging bar right here, you can see the market has really just drifted sideways out here. But that could be the bottom. It really could. Those seventh wave moves, they are important to pay attention to. We can see that we've got some nice market profiles down here, sponsored by Taz Market Profiles, and that says that, look, the Russell 2000 is going to have some stiff resistance. The sellers are lined up between 1158 and 1163, so the bulls are going to have to pull a little sneak attack out there. But if they can get past that 1163 level out there, that's going to tell you that it is time for the market to head much higher out here. Now, let's go take a look at a 2-hour chart out here. When we look at the 2-hour chart time frame, we're going to see, as soon as I can pull it over, we're going to see that we are also in that nice little seventh wave move to the downside. However, in this instance, we've got that price relative strength divergent pattern. Is that not a beautiful thing? Take a look at what took place up here at the highs. You had that seventh wave move, and this is taking a look at the 2-hour chart inside the Russell. So you had that nice little seventh wave move along with Stevie's favorite pattern of all, because it's worked since the beginning of time in charting when we take a look at data out here. In this case, we had that nice little doji right down here at 10 o'clock on the 2-hour time frame. A little moment of indecision followed by a nice big old bullish engulfing three-river morning star pattern. This says, and you've got the bulls are really lined up there. So we know where the fight, we know where the battle is. Maybe the Russell 2000 just gift wrapped the Santa Claus rally for you and I. Steve Rhodes with TFNN. We'll be right back. Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
TigerTV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. TigerTV, exclusively at TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's up 119, S&P's up 11 right now. And we were taking a look at the Russell 2000, right? From weakness is where we should find strength out here. And that's why we were taking a look at the different patterns that are typically associated with market turns. So you put that together with the 83-year analog, it says we got to be on the lookout. Now, what we also need to do, and it's really not the NASDAQ, it's hard. Let's take a look at the 5-hour charts, the 4 equity contracts, the 4 equity futures contracts for the 5-hour time frame out here. So in the upper left-hand corner, we've got the NASDAQ. Upper right-hand corner, we've got the ES Mini S&P futures. Lower left, we've got the Dow. And lower right, we've got the Russell 2000. Again, the Russell 2000, when we take a look at the futures contracts on my charts, there's a little 10-minute delay. So depending on if you're following along live, it might look a little differently than what you're actually looking at. Now, inside the NASDAQ out here, one of the things that was, I'll go ahead and blow this up on my screen. Here's what we know about it as it moved down. Number one, right back here, this is a trading session at between 2, it's 5-hour chart, right? So between 2 and the contract close on December 3rd. Nice little hammer candle. Now, hammer candle is just where the market is trying to hammer out a low. Just so happens that hammer candle coincided with the bottom of our TAS market profile, the bottom of that box being 4606. So you had communication coming in from all over the world when we take a look at where buyers and sellers are lined up inside the NQ. And they were saying, well, with our market profiles, hey, we're ready to defend this territory. And we also had that nice little hammer candle. So it was very convincing. That level's acted as support. Even yesterday, in the price demolition to the downside between 9 and 2 o'clock in the afternoon, 9 a.m. and 2 o'clock in the afternoon, we saw price come right down there and test that level and hold as support. Now what we're seeing is we had nice little new profile began here at about 11 o'clock last night. We can see the NASDAQ. Now, this is not going to end until another 34 minutes from now, but it's now trying to get above the bottom of the box, also of the 5-hour chart, also trying to get in that point of control, the area where price is most comfortable with. It's where we've got our highest congestion area, and that's priced out at 46.56. So these are the areas. The 46.56 level is where it is that you're going to want to watch. If we can, if the NASDAQ can get above that area, what that's going to offer to you and I is the promise of a move up to the 47.09-ish type range. So as I say, you're at 46.56, so it's another 50 points, give or take, out there in a move. Doesn't mean that it has to happen between now and the close out there, but that is just simply something that you should anticipate. So the NASDAQ, which came careening down, ran right into support. Inside of the ES Mini, that's in the upper right-hand side, we now have that exploded on our chart out here. And we can see that it never made it down to its daily bottom of the box at the 2028 level. Instead, it has, instead it has really found support down here at the bottom of the 5-hour chart. So in this case, if the ES can get above 2057, you're basically 2057 right now, give or take a few ticks. If it can close above, we'll call it, if it can close above 2062, you're likely to see 2075 as your next area. But really what it wants to do is get back up to the top of the box, 2088 inside of the ES Mini. If it overtakes that level, we'll give you those numbers as we get up to those areas. Inside the Russell 2000, well, we've already covered that. We don't need to do that. The Dow may be the first member of the the Dow here is back above the bottom of its daily box out here, very likely headed to 17,717, 17,687, somewhere in that general vicinity out there. So that's what's going on as we take a look at the markets out here. Have some requests. One request was, could I take a look at the USO? Wanted to get an entry. So the USO is the ETF for the crude marketplace, light sweet crude, which trade at 36.97. So what we've got to do is we really have to, in order to make any type of trading decision inside USO, we've really got to get our head wrapped around what's going on inside of light sweet crude out here. And there is no bottom yet that has formed if we are simply looking for patterns or at least signals, some type of Japanese reversal candle out here. That's not in place. Let's just look at the expansions of swing points out here. And that's it. Well, of course, you have to turn that tool on. Doesn't make sense to draw it unless you're going to go ahead and turn that tool on. So we'll do that right now. The expansion of swing points, what we can see here with regard to light sweet crude, it has made right now, it's trading right about the 1.272 expansion from the swing point of August 24th, that low, to the high out here on October 9th. If this area of 36.68 starts to fail, what you're going to be looking at is 32.50, about another $4 to the downside. So with regard to USO, I say keep your hands in your pockets, and probably might not be a bad idea just simply to look elsewhere out here. The bottom fishing in light sweet crude, it doesn't look so good. Steve Rhodes with TFNN. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization memorization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's nadex.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on TigerTV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back. Dow's up 124, S&P's up 11, Composites up 32. Had a request to take a look at Valiant Pharmaceuticals out here. VRX is the ticker symbol. So let's peek in on it. Of course, we know if we were just taking a look at the daily chart, we'll put that up here first. We know that this thing has been crushed, moves lower with some big volume to the downside. If we take a look at where all those sellers basically were camped out, you just pretty much go to that volume bar and you'd say, hey, right here at the low of the trading day of October 21st, right around 88.50. You're trading at 96 buckaroonies as we speak right now. So I don't know if the request was to take a look at it from a long side, a short side out here. What I would say is the following. If we take a look at the weekly chart, now we haven't really seen what you'd call any kind of sign of strength, real sign of strength off of the bottom. But you can see here November 19th, it started. You had 25 million shares to the upside out here. You then followed it up with another 25 million shares and another 25 million shares. So, you know, what's the daily chart communicating to us? and you're trading inside that day. That says, hey, if you're trading inside that day, you can go all the way to the level where it broke down, right? When you're always looking to buy a stock where it broke out from, if it'll come back to the level of the breakout. All we're really doing here is reversing the trade. And this says where the sellers may be lined up is the top of that October 21st level, and that would be at about the 148 area. You're at 95. 148, you're at 95. That could be a pretty decent bounce in the marketplace out there. Why? Yes, it could. So let's take a look at the weekly chart. Let's see what kind of message we have inside the weekly chart out here. And this is a little bit interesting because when we take a look at the weekly chart, there's two things that stick out at me. And those two things that stick out at me are, number one, that when the top was formed on a weekly basis, which was the week that began August 3rd, that is what's referred to as a, well, it's a bearish engulfing, but it's also a key reversal session. Now, interestingly enough, when we come down to Valiant Pharmaceuticals, the week that began November 16th, guess what we have? We have now a bullish engulfing candle and a key reversal session. So this says to me, hey, there's no reason why Valiant Pharmaceuticals, if it did it at the top, why wouldn't it do it at the bottom? Remember, they were celebrating at the top just as the bears are celebrating at the bottom. Be careful out there. If you are short this equity, you are getting signals and messages that say this thing could bounce. We already gave you one figure, but let's go see what our friends from TAS Market Profiles have in store for us. Let's go see where they have the buyers and sellers lined up. Let's take a look at both the weekly and the daily profiles out here. And on the weekly, which is the green line, horizontal line going across my screen, it says 124.20 is the number out here. Now, what was the daily? On the daily, what was that number where things broke down? This is why I got to go. Oh, shoot. I can't put D out there. VRX. That's not going to do it. I got to put D in the time frame. Okay, and that was... what was that? That was 148. So we've got 148 to 124. If, in fact, Valiant Pharmaceuticals closes above $100.04, you're at 96 bucks even, Steven, right now. It's going to head up to that 124 level, maybe even that 148. So you've got to determine whether or not you want to weather that kind of a storm out there. I'm not suggesting you go out and buy it, but it does have that bottoming type of a feel out there. I've got another request in here. Somebody wants to go order Domino's Pizza. So let's go take a look at ticker symbol DPZ out there. And, you get it in 30 minutes or less. Of course, here at TFNN, you're going to get the what Domino's Pizza is doing in way less than 30 minutes. So let's go take a look at it. Let's go ahead and leave our market profiles out here, see what they're doing. So you can see that Domino's Pizza right now running into pièce de résistance. That is the top of its weekly box out here, which is priced out at 110.46. You're right now trading at 109.64. Let's see what other information we can add. The swing point that sticks out at me, I don't know if it sticks out at you, is the one from September 25th, the low of which is 110.65, and you are at 109.64. The volume there was 666,000 shares. You're coming into it today with light volume, about 300,000 shares. So it looks like it's going to be a little light in the loafers out here. It hasn't actually tested it today. It did a couple of days ago, December 7th, 680,000 going against 660. Hey, that said, we've got a party that we want to throw, and we're going to order Domino's Pizza. Same message on December the 8th and yesterday with 722. What does it say to me? It looks like what Domino's Pizza buyers and sellers are trying to do is they're trying to chip away at that resistance level. And when they do that, which it looks like to me they will, price is going to go at least head back into test up the September 25th high at 114.70. Now, that's got volume at 666 million or 1,000 shares out there. And that could end up doing it because when I say doing it, that could be the extent of the move. The reason being is where Domino's Pizza broke down was at the 115.32 level. That's the trading day of July 17th. Big volume to the downside, 2.2 million shares out there. So at this stage, you're up against resistance. I wouldn't recommend jumping into the long side on here, but I would not recommend jumping in on the short side out here because, you're pushing into a swing point with volume out here inside of Domino's Pizza. So you get above that level, you're headed to 115. Whether or not the risk reward is there, probably not. Your risk reward was better off down here on the trading day, that little key reversal day, by the way, on November 16th inside Domino's Pizza when it was down around the 103 level. That's what's going on in ticker symbol DPZ out there. Let's take a look at what's going on in the currency market out here. Let's go take a look at the euro versus the U.S. dollar. Right now, we know yesterday we had that nice little break of the trading session. Well, let me turn off these profiles. Give me a moment to do that. Uno momento, por favor. And as we take a look at it, we had that nice. What the heck was that? We had that nice little continuation candle that formed yesterday inside the euro, moving to the upside by getting above the high of December 3rd. Today we're seeing just a bit of a pullback, really testing that level of that nice big wide-ranging bar on December 3rd. At this stage, it's just an inside day that's going on. Really suggests to me that the euro was going to want to move higher. 111.26, 112.89 is absolutely not out of the question for the euro to keep moving. If we take a look at what's going on in the euro Japanese yen, now this thing here has not broken out. So this is not necessarily very good for the bulls. Santa has got to get his communication system in order here. If he's really going to deliver on a rally, well, he's going to have to get this currency pair moving to the upside. However, the pattern that is still in place here is a potential continuation pattern of the upside. It still is the rising 3 pattern that is in play out here. So what we know is that price has run into resistance at its descending channel line out here. Instead of drawing the entire channel, I'm just using the body of the candles. That's the first red line down towards the bottom. So price is up against resistance. If it can take out that area, certainly get above the 134-ish range, we're likely to see 135.69. So we'll keep an eye on that currency pair. If we go take a look at what's going on inside the mining sector, I'd like to do that, but the system here is saying, hey, not so fast. That's weird. What the heck? Don't do this to me. We've got 7 minutes left in this segment out here. Of course, it's better than yesterday. At least I've got this computer up and running. There's still a couple of problems with it, but, it's working at least. It's chugging along. Okay. Come on, work. What is going on here? System, you can see it's a little bit frozen out here. And I know you don't want me to sing that any of the songs from the movie Frozen. Let's just hope that the rest of the system has not frozen out here. See if I can get to some of my other charts. That's really weird. Okay, so looks like maybe we're just going to tell some stories. Anybody have, hey, if you've got a really good tellable joke, yeah, you can go ahead and post it inside the Tigers. And, of course, you can email it to me, and I'll go ahead and read it. I'm not really great at telling jokes out here. I know. And the ones that I do know, I can't really tell you. I can't tell you those jokes over the air out here. But this is really like a bummer with this system freezing. And when I say it's frozen, it's really like frozen all over the place. Let's see if I can get... Maybe we can look at gold this way. Let's go take a look at gold on a 120-minute time frame. It's trading somewhere around 1071 out here. And so what do we know about gold? What we know about gold is the following. On the 120-minute time frame, price has pulled back and it's tested the bottom of its market profiles out here. So it has found some support there. That support right around the 1070 area. Now, it's just been hanging out. It's just been camping out down here. What gold has, the key level to be watching, in my opinion, inside of gold is on any pullback, any further pullback, is going to be the price level from December the 7th. And this was at the contract close. And that level that we're looking at is going to be 1065. That's the number you want to keep on your pad of paper, because if gold closes below 1065, Then what we're going to see is move down to, let's see if I can, this tool will work. We'll see at least an A to B equals CD to the downside, at least a 1-to-1, maybe more than that. That would take it at 1061. So you're like, hey, 1065, 1061, no big deal. I would agree. But more likely than not, what you're going to see would be a move to 1055. Now, I don't know that that's what's really going to take place out here. We may just see gold move sideways here for a bit longer. But right now, it's up against support. And that's the one thing that I'd like you to know. And that's taking a look at just simply a 2-hour time frame chart out here. How about that? The system is still just chugging along. It's not letting me do anything. So what can? So where do we go from this? Okay, well, now it's back. Maybe some of you sent my system some white light. Whoever did that out there, I want to thank you very much. Keep on sending that white light. Hey, let's take a look at some of these stocks here that are moving to the upside and to the downside. Let's take a look at Puma Biotech, or at least let's attempt to take a look at Puma Biotech. Down 13% volume today so far, 1 million shares out here. Puma Biotech, I've got a line out here at 57.39. Looks like that is where price is headed to. Let's go see. Yeah, so Puma Biotech, how about this? Now, this was a stock, probably if you were taking a look at Puma Biotech, I don't know what it is that they cure out here, but it had to be something. Or there was some kind of rumor event or something that took place on July 23rd. In the case of Puma Biotech, perhaps one of the wide-ranging bars that you are going to see out here, because this thing went from about the price point of let's call it $58 on the trading day of July 22nd to July 23rd, going up to 241. Now that is one heck of a nice wide-ranging bar. And what Puma Biotech happens to be doing is really pulling back to an area of support with light volume, too. With light volume. How about that? So it looks like Puma is pulling back to the 46.60 to 57 level out here. Now, how would you play something like that? What you need to see is coming, if it does continue to pull back, you need to see a sign of strength off of the bottom. Of course, go see what fundamentally happened inside of Puma Biotech. Just go ahead and probably Google that day as well as it, and you'll find out what they were curing out here and see if that's still on the books or something like that. Also to the downside, you've got First Solar, FSLR, down about 11%, $6. Volume behind its move out here now is about 5 million shares. Now, this thing had broken out with 6 million shares. That's where it's pulling back into, but it's doing it with a bit too much volume out here. You see the breakout day, wide-ranging bar. You don't see the wide-ranging bar because it was gap up. Same thing. So you take a look at that day, that was 6.6 million. You're pulling back with 5. What this says to me, in the case of First Solar, is shoot First Solar could, let me see, what's the high here? 52.15, the low 52.16. It could gap down tomorrow and create a nice little island reversal out here. And that would say you get down to the August 24th level, right around the $40 and change range out here. Let's see what else we have inside of First Solar. Doesn't look like a lot, other than it looks like a big, huge trading range out here inside of First Solar. Let's go see what else is going on. Let's go look at what's Chipotle doing. CMG is the ticker symbol. Up leader today dollar-wise. Of course, we know that thing has just simply gotten the kibosh out here. And, it looks like, so our anticipated area for Chipotle to move down to is about 477 to 442. Let's go see if anything has changed here today. And the volume to the upside today, 2 million shares. And so it's really at this stage of the game inside of Chipotle, right? It's very likely, and a continued bounce higher, very likely to get up to the 614 area. And that's where this thing broke down. 11/20th, on November 20th, 614.70. Let's go take a look at our profiles. Of course, I hope that's not what's been causing the problem with my system. Okay, we take a look at the profiles. It's actually suggests that that's the likely outcome, that we should see a continued move higher in Chipotle. So the next stop on this train is going to be 599.52, and then 614.70. And if we can get above 614.70, 644.51. This is Steve Rhodes with TFNN. We'll be right back.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
It's true. Life is all about choices. At Everbank, they're making it easy for you to make a smart one with this special cash offer. Open a new yield pledge money market account with funds from another financial institution, or deposit new funds into an existing yield pledge money market account, and you could earn up to a $500 cash reward. And if you're opening a new account, you'll also get their new higher 6-month bonus interest rate, along with their yield pledge promise that ensures your yield will always be in the top 5% of competitive accounts at banks nationwide. Open a new account or add to one. It's your choice. To qualify, you must meet balance and other limited time offer requirements. Go to everbank.com/TFNN for details and deposit options, or speak with one of their banking specialists at 1-855-750-4051 for more information. You must act by December 31st, 2015 to be eligible. Everbank is a member FDIC.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. 134 points. The upside inside the Dow as we speak right now. S&P is up 13 points. This is an interesting stock chart, though. I was looking at ExxonMobil, which is up 95 cents today, 10 million shares out here. I think Exxon may still be It's in the top 5 inside the S&P as far as the weighting out there. But if we take a look at it, I think it's the monthly chart. I'll put the monthly chart up on my screen first. And what you're going to notice is all the way back here, this nice little trend line from July in 2002, July 1st. ExxonMobil was down at a price point of $29.75. The next aspect of the trend line really was back here in July of 2010, like July lows. In fact, the next low that came out here wasn't July, it was in August. We're going to say that that was close enough out there. Very interesting, huh? I don't make this stuff up. But here's what we know is that price I think this week came back down and tested that trend line. Let's switch back over to the weekly chart. On the weekly chart, now the week is not over here, but what we can garner some information inside of ExxonMobil. Number one, we know that if the candle were to close right now today, we'd know we'd have a hammer candle on a weekly basis. Hammer candle trying to hammer out a low, coming back into a long-term trend line out here. Sounds to me like it's trying to form a bottom. Number two, we can go just simply take a look at the swing point, which was that week of August 24th. And we can see that the volume to the downside there was 143 million shares. And this week we've done 74 million shares. It is not likely that ExxonMobil between now and the end of business tomorrow is going to do another 70 million shares. So as long as ExxonMobil can close above 75.98, you're going to have a rejection of a swing point on lighter volume. You may have a bullish reversal candle. I won't know till the end of the day tomorrow. But you're going to have a test of a swing point, and you're going to have at this stage here, a test of a rising trend line. That was placed inside this chart a long time ago. Let's look at the daily chart, see if there's any message out here inside of XOM. So it was just a couple days ago where price came down to test that trend line. Really no real volume matrix or anything there for us to take a look at. Let's look at the profiles. Let's go see what we've got in store here for profiles. So price came down, in essence, found support at the weekly profile. You're right at the point of control on the daily basis. So pretty good chance that ExxonMobil is going to make its way up to 78. 79, 79.58. Next, if you get above 79.58, $84. $84 to maybe all the way back up to the swing point from November 3rd out there. So that looks pretty good. That's interesting. I know what the short interest is in ExxonMobil, but it has come down to a support level. Hey, let's go check in on the VIX index. Let's go see what she's doing as we speak right now. Not out of the woods. So the Santa Claus rally, again, we got nice signals inside the Russell 2000. We got nice potential signals there. But the VIX index is saying to Steve-O-Son here, not so fast. You really need to see that VIX index, whether it's today, tomorrow. And if it's today, it's all the more better for you. It's got to get below 1850. I don't mean just get below it. It's got to close below 1850. And you're at 1890 as we speak right now. So that 50 cents is really important out here. But it's getting close. It's getting close to the market, creating at least a short-term bottom out here and a bounce. Let's go take a look at the oscillators, see what we've got going on out here. Interesting. Oh, very interesting. Take a look at the Dow. It's getting it back up towards that zero line. Very interesting. We're not there yet. I don't anticipate that that's what it's going to do today, but it's getting close. That would be one of our confirmations come tomorrow that that Santa is not delivering coal and that the markets are going to move higher. Folks, stay tuned. Our man David White is up next, and we got the Tom O'Brien Show from 3 to 5. Andy Heck to bring it on home. Have a great Thursday. I look forward to seeing you on fabulous, fantastic Friday. Take care, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.